Hello, today is March the 9th, 2024. We'll do our disclaimer, we'll go over our calls, we'll make some predictions. It's my trading plan for Monday. Monday is March 11th, 2024. Please remember, it's a call, I can be wrong. Any trade one makes should be made at one's own risk. Look for the pattern with the early high, which is this, and Monday we're expecting the pattern with the early low. Now we had March the 8th, Carolan's date as a possible change in trend date. Last week, so far that's played out. There were some other systems that had one day earlier, but the open on the 8th can substitute for the close of the day before. So as far as I'm concerned, a number of other people's timing systems all had this as a change in trend date. Now, not every one of those dates works, but if there isn't a date, it probably isn't going to be a change in trend. So that was certainly one of the dates which could have been a change in trend, and so far at least it seems to be playing out. Well, this is what we said. We had this date all last week. These are the patterns I'm looking for next week. Monday should have the early low. We got an ultimate sell signal right close to the high. I mean, if this is all you had and you had nothing else, it by itself wouldn't justify a sell, but it certainly would argue against going long, even though we were gapping up, rallying, and hitting new all-time highs. The system said hold your horses on a long. Now we're still in the stop loss from the last weekly DeMark combo sell signal. We actually started a new pattern. Here's 9 days of setup, 9 weeks of setup, and we've completed 9 weeks of countdown. The 9th week, the end of the 9th week is usually when one sees a retracement, even though it's not a requirement. While we're dropping to new lows here, MEJT said this low wasn't going to stick, and it didn't. And it also said this high wouldn't stick, and that didn't hold either. It's not a bullish pattern when you hit a new all-time high and close in the red, and it isn't bullish either when you've had this gap up and not only close in the red, but close under the low of the gap. It means this whole thing was a false move. It doesn't mean you have to drop immediately. If you measure this, see there's a good Fibonacci hit right here. I mean, it's not the only Fibonacci target. Doesn't mean you can't keep on dropping and hit 50% or 61.8 or 100%. In fact, I'm hoping you do keep on dropping, but usually when you're dropping like this and you hold on to the midday low and you hit a Fibonacci target, you at least have to be open to the possibility we could rally Monday, even though it's not a requirement. It isn't a requirement, but it's not prohibited either. And it's, even though we think this is a top, it doesn't mean you drop in a straight line. And this is one of the places where there could be a pullback. It certainly isn't required. It's not what I'm looking for, but if it happens, you can't say it's a shock. Now, any break needs confirmation. We know that's an outside reversal bar, but we had one in Bitcoin last week or the week before, and everyone said the move was over, and then it went out to a new high. So any break needs confirmation. You really have to go under Friday's close, even if it's by only 1 cent. And for real confirmation, I'd like to see us break this line, ideally by gapping under. If you don't gap under it, I'm wondering if it's going to really stick. You better we weren't going to gap under it if we had a little rally and then traded under it. Well, here's a 30-minute chart. Here's a diamond on stilts. This is my inverted diamond on stilts pattern. Here's your stilt, here's your stilt, here's your diamond. The origin of the left stilt is a support resistance level. You went right through it, came right back up and dropped. So we had the reversal right at the time that other people's work called for reversal. We had resistance right where my pattern calls for resistance. You'd like to see us keep on dropping, but as I said, until it's confirmed, you just can't be certain that's going to happen, even though that's what I like to happen. I don't always get everything I like. Well, you can still count this as 5 waves up, but if you look at wave blue 5, this is from the October low. You can count this as 5 waves up, and I can no longer get a good Fibonacci relationship of this wave 5 to the other waves. Now, you certainly don't have to, but if I can't, I suspect something else is going on. And if you keep dropping, I'm not going to worry about that since you don't have to, but let's look at another way we can count this wave up. We're going to start from here. We have great fibs if we've only completed 3 of the 5 waves in blue 5. I mean, everything works. Wave 3 is 1.618 times wave 1. If you look at this wave 3, all these subwaves have perfect fibs. It's just an ideal pattern. 1 of 3 is equal to 5 of 3. I mean, it implies we're still in this wave blue 5. Now, that doesn't mean the high can't be in. You can have a pretty big drop in wave red 4 of the blue 5 from the last chart. And as long as you don't overlap wave 1, nothing's changed. And you can even have a wave red 5 up, which is truncated and doesn't hit a new high, which is what I'd like to see. It's just kind of a heads up that we don't have to drop in a straight line here. We're pretty much in a strong bull market. It doesn't pay to be really super enthusiastic until we get the confirmation. Longer term, of course, we've completed a huge ABC, and we're going much, 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 much higher. Well, Monday's pattern has a really low. It doesn't tell us where we open. The rejection of the move to a new all-time high came at a time compatible for the market peak. Now, like anything, it still needs confirmation. You want to trade under Friday's close and ideally break that long-standing trend line. If we do, there should be plenty of room to be short with a higher degree of confidence, even though I think that top should hold. Many market leaders had intraday reversals as well. If this is a top, it isn't the top. We're still going higher. However, a top of the Carolan F23 level, which is where we are if Friday's high holds, should lead to a significant drop, even if it doesn't come immediately. The higher this number, the bigger the move. It's somewhat disconcerting to the bear case that midday lows held. Now, of course, time doesn't run out until Monday's open, so it would be ideal if we were to gap down Monday and promptly undercut Friday's low. However, I don't see anything that requires that to happen. I don't even see anything that requires us to trade lower. And that's what I like to see, but if we trade up, it doesn't change anything as far as I'm concerned. I don't have anything saying it's impossible. My preferred wave count has us in the wave 5 up, which hasn't yet completed. It's not the only valid count, and if wave 5 of 5 truncates, the price high of this rally can still be in, which is what I'd like to see. But, I mean, trying to pick tops is kind of a dangerous thing. And if we get confirmation, there should be plenty of opportunities to get short with a higher degree of confidence. That doesn't mean it's wrong to get short now. I just like to cover all the bases. So Monday we're going to look for the pattern with the early low. This holding on to this level at least allows for the possibility we move up. If this held right at a resistance level, I'd be a lot happier and have more confidence in the call if we get down and gap down smartly. And that hasn't happened yet. I don't always get everything I like. But there's a good chance this is the end. This is a significant high here. And just because there's a chance doesn't mean it's right. We're going to have to wait for confirmation. But so far, things are playing out the way I thought they would. And we'll just have to wait to see if they keep obeying my script. And that's today's call.